So the US dollar is steady, oil is slipping, and the DAX is knocking on the door of a major psychological level. But here's the real question. Are markets pausing or preparing for their next big move? Because when traders start waiting for Fed minutes and inflation data, markets tend to behave like a coiled spring, quiet on the surface, but ready to snap. And today, that spring might just be tightening. So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief. Today we'll be breaking down three key instruments shaping market sentiment right now, with Fed minutes due later today, inflation data looming, and geopolitical developments shifting oil sentiment. Markets are entering a critical decision phase. So let's get into it. Let's start with USD CAD. So the Canadian dollar has been losing ground, and the reasons are both fundamental and structural. The Canadian dollar weakened towards 1.365 per US dollar after Canada's latest inflation data came in softer than expected. Inflation slowed to 2.3% year on year, while the Bank of Canada trimmed to 2.4%, reinforcing the idea that inflation pressures are moderating. That matters because when inflation cools, it reduces pressure on central banks to raise interest rates. And when rate expectations flatten, currency support tends to weaken. At the same time, crude oil, Canada's key export, has been under pressure, further undermining the Canadian dollar. Meanwhile, the US dollar itself has stabilized above 97 on the dollar index, supported by expectations that the Fed will keep rates steady while monitoring inflation. So right now, USD CAD is being pulled by two forces: a stabilizing US dollar and a weakening Canadian dollar, driven by softer inflation and weaker oil prices. So that being said, let's look at the charts. USD CAD is currently trading around 1.365, pushing higher after the Canadian dollar lost some momentum. Resistance is currently sitting at around 1.368, followed by 1.392. So the key takeaway here is simple. The Canadian dollar had previously strengthened, but the momentum is fading. And when a currency loses its fundamental support, technical retracements often follow. So the key level you should be watching closely now is whether USD CAD can sustain upward momentum or whether this is simply a temporary rebound. Because right now, this looks less like a breakout and more like a market reassessing its direction. Now let's shift our focus to crude oil, and this is where geopolitics is driving price action more than supply and demand. WTI crude oil is trading near $62 a barrel, extending recent losses. The main driver, progress in US-Iran nuclear negotiations. Both sides have reached an understanding on key guiding principles, and while a full agreement isn't imminent, the possibility alone has reduced the geopolitical risk premium in oil prices. Now you might be sitting there going, well, Francois, why does this matter? Well, it matters because if tensions ease, oil supply risk declines and markets start pricing in higher future supply. There's also ongoing discussions around potential increases in Russian oil flows, which could further boost global supply. At the same time, OPEC Plus is considering resuming output increases in April. Put all this together and oil markets are starting to price in one thing: more supply and less disruption risk. That being said, let's look at the charts. So oil is holding near $62.40, but momentum has clearly slowed. Despite minor rebounds, the broader context remains cautious. Oil has risen by about 3.5% over the past month, but remains significantly lower compared to longer term levels. Support is currently sitting firm at $62 a barrel, followed by $60 a barrel. Near term resistance is currently at around $64 a barrel, followed by $66 a barrel. So right now, oil is caught between two opposing forces: geopolitical easing, which pressures prices, and ongoing geopolitical uncertainty, which prevents a sharp collapse. So, in other words, oil isn't trending strongly in either direction, which makes for perfect conditions for some range bound trading. Now, let's turn to the Germany's DAX 40. And this is where sentiment remains surprisingly resilient. The DAX rose to around 25,047 points, reaching its highest level in over a week. This move reflects improving sentiment across European markets, supported by corporate developments and optimism around growth. One major catalyst was Bayer's, which surged nearly 7% following reports of a multi-billion-dollar sentiment to resolve legal issues. At the same time, broader European markets have been supported by economic stimulus expectations, corporate earning developments, and continued optimism around long-term growth. However, global uncertainty remains, particularly around Fed policies and geopolitical development. So when we have a look at the charts, we can see DAX is now hovering near that 24,900 support level, which is a critical barrier. The next barrier to overcome is the resistance level at 25,200, followed by the all-time high. So the DAX previously reached an all-time high at 25,511, meaning it's now operating near historically elevated territory. This suggests strong underlying sentiment, but also increased sensitivity to macro developments. So traders, here's the question you should be asking right now. When we receive the Fed minutes later today, will this confirm stability or introduce uncertainty? Because the next major catalyst isn't oil or the DAX or the US or Canadian dollar, it's expectations. So with Fed minutes due, GDP data also ahead, and the PCE inflation report coming on Friday, markets are preparing for clarity. And clarity tends to bring volatility. Today's data could either reinforce current trends or reset the entire playing field. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. If you want to experience the difference for yourself, simply head over to atfx.com and go and have a look. So traders, until next time, stay sharp, stay focused, and trade smart.